you need to seek the advisement of your financial, advisors, accountants, legal advice from lawyers. Okay, because I'm not offering that here, and so I'm only providing this as entertainment value, and also as educational, simply, and urging you all to learn more about the things that I'm talking about. All right. I'm going to present to you guys a simple way to look at investment, how to look at it in your life. It may help some of you. To others, it may be simplistic, babyish, or whatnot. But I know it's going to help a few people that may feel overwhelmed about how to invest money and how much should be invested and how to look at it. So I'm going to make a very simple analogy, if you will. This is why I also have the philosophy tag in this stream. So simply, I'm trying to reduce the noise from outside, but you need the air. Yeah, hi, I'm improving. Can you follow me? I'm improving. I don't know how you are improving, but in any case, we'll see. We'll see. What can I say? So look at investing as something in your home, in your in everyone's home. Well, not everyone, but people that have homes that go up into the sky, 2 floor, 3 floor, etc. A building. Now, the whole building is not, for our example, is not in your investment. I got some truck backing up, so the whole building is not your investing or your investment. It is your life, right? And part of your life is money. There's money involved, maybe in the walls and on the floor, on the floor of the building, but it's not the whole thing, right? It's your life, it's your relationships, your hopes, your dreams. That's the stuff of the home or the building that we are looking at. So if you can imagine that with me, okay? So yeah, there's money there, but it's really all the other things that are part of your life. And investing, you need to look at it as a small part of that whole big picture. And a good part of the house to use for our example of a building is something that goes up. So actually, something that goes up inside your home or inside the building, and or that's something that allows you, that helps you to go up. Okay, better said, right? Because if you make more money, right, you're able to improve your lifestyle, improve things for yourself, right? Get up higher in life. So what exists in your building and in a home that has some height to it, that helps you, a person, to go up? Now, don't say elevator. We're not looking at automated software here. There's no free. We're talking about basic, using your own power to do things. What helps you go up in a building or in your home? And the answer to that is a staircase, right? Because for you to go up to the second floor, right, you have to go use the stairs. What are the stairs? The stairs, first of all, the stairs isn't your whole house. It's only a small part of the house. And it only facilitates or helps you to go up to a new level. So I like to look at investing and the returns on investment as raising you up to a new level, because that's what it's supposed to do, and it does. And actually, the more money you get from your as a return on investment, the higher you become financially and in society, etc., and stability as well, right? For a building to have another floor, it has to be very stable, right? It has to be well fortified to support that higher level, right? So that's again another thing. But directly, because you can have a staircase and still go up, you don't have to have a second floor, you can go up to the roof. of a building. So, a second floor is not essential even with a staircase. But usually when we have a staircase, we do have a higher level in which to live in a home and or to do work as in a building. So if you look at investing as a staircase, that gives you a pretty good idea of what is the sound advice on how to invest your money. Simply, it isn't all your money, so it's not the whole house. It's simply a part of the house, and specifically a little part that will help you go up, get up from the ground, right? And some of you live in the basement, so you have listen, but you can always have a staircase going up, right? So, but the whole point is the staircase are different mini levels, right? You can have two-story building, but you can have what, 18 to 20 stairs, right? See that? You have two stories, you can go up to the next level, but to get up to the next level, you got to walk up, right? Sometimes two flights of stairs, sometimes one, but there's more stairs per flight, right? Per case. So it doesn't matter. Either you got 18 stairs, 16 stairs, 20 stairs, right? That doesn't matter. But the fact is that you have quite a number of steps to reach the next level. So investing should never be in your mind overnight. You're going to take one step, invest in this thing, and that's going to take you to the second floor. No, that seems to be like an elevator, and there's really no elevators. I mean, there's really, uh, you know, you're really dreaming if you think that you have an elevator in your home. It's as simple as that. Now, can it happen? Has it happened? Yeah. But then how, if you fall down, if for some reason you collapse from that second floor, how do you get back up? See, because you were lucky to get to the second floor without a staircase. But the fact is that you still don't have a staircase. If you fall down, if that investment collapses and you fall down to the ground floor, how do you get back up? Oh, I don't know. Right, that's the problem. See, because you didn't build a staircase. At least if you built a staircase, you would know how to do it through investing. At least that's one thing you can learn on how to build a staircase with investment. In my previous video, I was talking about the need to learn how to make money, period. In any other thing, and other things, multiple things, so that you can always get up to the second floor or get back up by utilizing those skills and that knowledge. And those are staircases for you. So you have more than one staircase, right? But that's, again, what about the staircase? It is advisable that you only use 1% of your money, 1%, to put at risk in investments. A lot of people put more, 2%, 3%. Some put 5. Some wild ones put 10, okay? And others, they're just too crazy. They're really putting it all at risk, which is highly not recommended at all. I mean, you don't need to, is the point. If you know how to make money, you don't need to put all of the money at risk. It's ridiculous, okay? But you see, it's the sign of the problem that you have to invest all of your money in order to make money. That means you have a problem. And it only gets worse once you get something happening and then you collapse or it collapses and then you're back down with nothing and no knowledge of how to get back up. That's really having had it and then losing it and not knowing how to get back is devastating. Okay. So the advice for professional investors is 1%. If you have money funding a Forex account or a stock market account, it's really just 1% of that that you really should be putting at risk at play at any given time. So this is what you have to look at is putting a little bit of money, not the whole thing, a little bit. very little. And if you look at the staircases are equal. Each step is equal to the one before it. Same height, same height, same height. And one way to look at it is like double, right? So the second staircase is double the first staircase, and it goes up each time. It doesn't increase in doubling. That is not what the staircase is. It could happen that way, but it's not. That's not the way you're doing it. What you want to do is just go up with your investment and double your investment. It's a plain and simple way to look at things. Just double. If you put $50 in, what you want to do is set $100 as your takeout profit. How much of the profit you want to take out? It's really your decision. But in this example of the staircase, you should take out 50% once it went up 100%. It goes up 100%, you take out half. That means one step, so that first step is established. And then you take the second step, that other $50 of the 100, and you put it back. You invest it again. And you wait for that to go up to 100. And then you take that out, and that's another step. And you continue to do the steps, steps. Each time taking out another step and leaving it, putting it in the account. Just let it stay until you come out with, let's say you want 10 steps. So you have 10 staircases, and from the initial $50 that you initially invested for the first step, you made $1,000. Sorry, $1,000 because I'm sorry, $500 because you wanted to get 10 steps. That means 10 times 50. So you wanted to go up, and then you have $500 instead of the 50. See? So, and you stay steady until you have your exit plan fulfilled. So if it was 10 steps, you make the 10 steps. Now, from the initial $50, now you have $500. Okay, and then you take a breather. All right. So now you have more money to start the staircase again. Again, we're still playing with how much? With 1% of all the money that you have. We're still playing with that. We're not touching any more money. You're not touching any more money of yours. You're only playing with that 1%. And you're doubling that 1%. Double, 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 double. 10 times, 20 times, whatever your decision is. It's up to you. But now you have more money. And so now we come to rebuild the staircase again. But now instead of 50, now you can do 100. You can do 100. You can do the 20%, right? Because it will be 20% of the money you got from the return of investment. But now you can spend the 20%. It's not your money. It's not 20% of your the money you originally saved in your account, right? You're not touching that still. You're only touching the gain, the return of investment, and then you're taking that 20% of that, and then you're starting a new staircase on $100 instead of 50, and you keep doing, and then it's 100, and then by the time that's done, you're another 10 steps. Now it's $1,000, and you keep doing that. You keep adding based on the returns, not adding more money from your pocket. Ideally, you should only invest one time from your pocket, the initial investment, ideally, and then build your steps and use that gain to build steps at a higher initial investment each time. And that's basically how you multiply your money and make safe investments that even if everything goes down the tube, you only lost really 1%. You still got 99% in, the investing portfolios saving account, in the account used for investing, you still have 99% there. This is the key to having sound investments, and just go slow and simple. Slow and simple. Don't be too overly again, you're more most importantly is that you should be learning how to make money. Why did the people that lost on Black Friday, I believe it's called Black Friday? I'm sorry, I've been a long time since I've done the history. Was it Black Friday or when the stock market crash? Oh boy, it's been a while since I read up on that stuff. But what did people do? These former millionaires who are now broke, what did they do? A lot of them did what? They threw themselves off a roof. They lost everything. All of their wealth was lost in a few seconds on that fateful day. Stock market crash, famous. They killed themselves. Why? The one simple answer is because they didn't know how to make money. That's the single 100% correct answer. They did not know how to make money. Everything they had was playing gambling in the stock market, put at risk in the investments. And other than that, they didn't know how to make money, how to turn a buck. And therefore, they had no hope. And that's that. That's not the type of investor you want to be. You want to be a smart investor, which means you don't need to invest to make money. That's it. It's as simple as that. You don't need to invest to make money. Investment is a sideshow. You should always be able to make money and not need or rely upon investments. Because the day that comes and you lose it all, like right now, the little case study we did with the Shiba Inu in the Coinbase account, right? Coinbase, I didn't put a dime in Coinbase. None of my funds have gone into Coinbase at all. What was in Coinbase was simply free coins. And I got the free coins by watching videos. That's it. And that account went up 10 times from free coins. Right? And I expect it to go up even further. When Bitcoin goes up, I expect a lot of stuff to happen on that. And I'll report on that. But again, if it all goes to zero, do I care? No. Not a bit. Not a bit. See? So again, but investing should be like that. You lost, let's go again. Let's do something else. It's as simple as that. You know, you shouldn't care that all of the money was lost if you do it the way that we're talking about here, because it's so little of your holdings, it really shouldn't matter. Okay, it's just money that you could lose, and guess what? It happened. You lost it. So okay, so no loss. You lose hair every day, and that's the way it should be. And losing an investment should be just like losing a hair. When you comb your hair, you see a hair. Sometimes I got a hair on my shirt, right, from brushing my beard. Do I go, oh my God, I lost my hair? I don't do that. It's hair. It's I grow more. This is the way investing should be, and losing should feel. It's just you have your good days, and you have days that you lose your hair. That's it. And that's the way it should have been for those poor folks. I feel sorry for them, really. that they're not able to make money. They don't know how to make money if it wasn't for the riches they had thrown all into the stock market crazily. But the bottom line is that's what they did, and they lost. Losing is part of the investment scene. It is part and parcel of it, okay? So that's why you cannot invest things that will hurt you when you lose it. And that's that. So I hope that with this little example, and you remember the main thing is not to put in all your money, not even a significant part of your money, just money that's, and then another case study we did. I put in an account that was doing nothing for years. I had a little chump change in an account that I wasn't even touching or worried about for years. I said, this money is sitting there. Every year it's the same thing, the same little thing, the same little nothing happening to that. I said, well, might as well just throw it into, I was thinking about throwing it into, the crypto machine there and see what happens, because it doesn't matter. It was money that didn't matter to me at all, because I've moved on to you know to other things. At one time, I guess when I was a little kid, that may have mattered, but now it doesn't matter to me. But that money has grown significantly. If I would have left it in that account, it would have still be that what it was, just a measly, just what it was, and insignificant to me. But now it's grown, and when Bitcoin goes up to 120, you know, I expect that thing to really go. It's going to be impressive, right? So, but does it matter if it all goes to zero to me? No, it's like losing a hair. This is the point. It really doesn't matter, because at the end of the day, I know how to make money. I don't need crypto to make money. If it wasn't for the pandemic, I would have made an extra couple of $1 million last year. And that's the absolute truth. Without crypto, it has nothing to do with crypto. Nothing in absolute to do with crypto. That's the difference when you know how to make money. Because of the pandemic, that didn't pan out. But I'm ready to go as soon as the coast is clear with the pandemic issues, if it ever will be. I'm ready to go. And if it never is, I'm okay. Again, because I know how to make money. And I know that I did create a product and service that's multi-million dollar. Because that's the level that I'm at. And I'm not saying that to puff myself up. I'm already puffed up. I don't need that. But I say it to emphasize for you all, the need to know how to make money. It's the most important thing. It is better than Bitcoin. It's better than Bitcoin. And that's really what you guys need to learn how to do, and to do it. Because sitting around waiting for Bitcoin, you guys could have been millionaires. Actually, I think, was it before the pandemic hit? Right before the pandemic hit, I was teaching students how to turn a few dollars into $1 million. And they were able to get an opportunity that had occurred at that time, and I caught attention to it, and I brought it out to them, and $1 million deals were made. I'm telling you right now. So, without Bitcoin, without cryptocurrency, like I said, the real world has more opportunities for you to make millions of dollars than cryptocurrency will ever offer you. It's just a fact. The fact is that you just don't know. You don't know. You don't educate yourself. And now the little bucks that you have that could educate yourself, you're not doing so. Let it ride. Let it ride. Oh my. Take care. Be careful out there, man. Prepare yourselves for the worst. And hopefully it won't be that way.